Do you need help deciding whether to get into short-term trading or long-term investment, and you are not sure which one fits your skills and goals? Both strategies have made a lot of people successful in achieving their goal of financial stability or accumulating wealth, and you can do this too. This video might help you determine which investing style is for you, so keep watching until the end to weigh the pros and cons of short-term trading versus long-term investing. Short-term trading versus long-term investing. As their name suggests, the most significant difference between short-term trading and long-term investing is the approach to using time to generate profit. Both strategies rely heavily on a fluctuating market. Still, long-term investors tend to let their investments just sit there and accumulate profit throughout extended periods, from a few years to decades. Because of this, long-term investing is considered the more traditional or conservative strategy between the two, since many wealthy people or known financial experts like Warren Buffett vouch for the efficiency of this strategy. On the other hand, short-term traders' money flows in and out frequently, and trading activity can range from minutes to weeks because the traders buy or sell depending on the market's price fluctuations. This strategy is regarded as the riskier approach of the two, but can also give you a higher yield and profit if you do it right. The best way to measure your investing success is not by whether you're beating the market, but by whether you've put in place a financial plan and a behavioral discipline that are likely to get you where you want to go. This is one of the principles that famous economist Benjamin Graham always used to say. So, you're on the right path to success if you're looking for a strategy that works best for you and your financial plan. To ensure which one between short-term trading and long-term investing is the right approach for you, let's look into their pros and cons. Pros and cons of short-term trading. Many financial experts will probably advise you not to get into short-term trading, especially if you're a beginner, because of how risky it can get. It's a high-risk, high-reward strategy, which means that because of how risky it is if you do it successfully, the rewards that come with it are worth the risk. However, success isn't always guaranteed, and if you don't use this strategy right, the loss that comes with it might be a little hard for most people to handle. Strategic day trader Sami Abusad says, "Are you willing to lose money on a trade? If not, then don't take it. You can only win if you're not afraid to lose, and you can only do that if you truly accept the risks in front of you." And this is a statement that a lot of people need to hear. This is the biggest disadvantage of short-term investing because many people must prepare to deal with the loss. Suppose you want to earn as much profit as possible or recover from the loss. In that case, you must pick yourself up immediately after your losses and return to trading because short-term trading is fast-paced. If you don't learn how to adapt to the constant loss, you'll just lose more money than making a profit. Learn to take losses. The most important thing in making money is not letting your losses get out of hand. This is a quote from US investing champion Marty Schwartz that short-term traders should keep in mind. Another disadvantage of this strategy is that throughout the day, you make transactions frequently, which means you are constantly charged platform fees, and short-term capital gains are taxed as income tax. The strategy also requires a lot of time and commitment because you continuously have to monitor the chart's movement to make a profit. Short-term trading, however, is quite advantageous for those looking for instant gratification and can handle risks very well. You can frequently see the profit returns of your trading efforts and quickly use your profit to reinvest in the market to trade again. Because of this, if you are good at short-term trading and manage your finances well, you can quickly accumulate wealth in a short period, which is many people's goal. If you think that you'll probably not do well with this strategy but still want to try it because it fits your financial goals best, trying or practicing trading with smaller amounts might help you. There's no harm in trying if you start small, and just like what Jesse Livermore, a known successful stock trader, said, "The game taught me the game, and it didn't spare me the rod while teaching." Short-term trading has made many people successful, like Jesse Livermore, George Soros, and Paul Tudor Jones, and you might become one of them too. So, after hearing the pros and cons of short-term trading, is this strategy right for you? Pros and cons of long-term investing. As mentioned earlier, long-term investing is considered the more traditional approach to the stock market. This is because, unlike short-term trading, long-term investing carries fewer risks and has made a lot of famous finance gurus rich for a few years to decades. So, it's a tried and tested, successful investing. Despite having fewer risks than short-term trading, it doesn't mean that it is risk-free. The most significant disadvantage of this approach is that it does not yield as much money as short-term trading, especially when the money you have invested is relatively small. Another major disadvantage of this approach is that you must hold your investments for a long time and not succumb to the temptation to sell your investments when there is a recession or dip in value. Many people are also not fit for the waiting game and will put out their investments when they don't see a quick profit turnaround. Like Warren Buffett said, if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. Long-term investments are for those who have patience. Long-term investing also requires a bigger capital, and you constantly have to reinvest money to see higher rewards in the future. This is the secret of most people who became rich from investing. They already had a big capital in the first place. But if you are patient enough and cannot commit much of your time to watching the markets required for short-term investing, long-term investment is the perfect fit for you. The biggest upside to this approach is that it is low commitment and low risk. And as long as you invest in stocks that have a lot of earning potential and you don't sell them when the price value is low, you are guaranteed to make a profit within a few years. Also, unlike short-term trading, the tax charge from profits made through long-term investing will cost you much less. Again, this strategy is quite risk-free, so even if you decide that short-term trading is the best for you, setting aside some of your money for long-term investing is a good move too. Many people have achieved financial stability through long-term investing, some of which you might be familiar with, like Warren Buffett, Peter Lynch, and Charlie Munger. Long-term investing might also give you that kind of financial freedom in the future. After hearing the pros and cons of long-term investing, is this the right strategy for you? Ultimately, in the end, there is no objectively right way to handle your money. You can, however, find the right way that fits your needs, free time, and goals. It's important to find one that fits you, especially if you're a beginner in investing, so you can have a clear path to follow. And then maybe once you're more skilled or confident, you can try playing around with the strategy that you use on how you handle your money. Just like how George Soros says, "My peculiarity is that I don't have a particular style of investing, or more exactly, I try to change my style to fit the conditions." I hope you found the information in this video informative, and if you choose either short-term trading or long-term investing, let me know in the comment section below. Also, don't forget to like this video and press that subscribe button to stay updated on our new videos. Thanks.